Welcome to holisticinvestment.in YouTube channel. We help individual investors like you to take a right financial and investment decision.
ABSLI Vision Life Income Plan. Aditya Birla Sun Life's Vision Life Income Plan. Is it a good investment plan to create long-term wealth? Will this give you enough life cover? Let us explore and review. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial and investment decision. Before analyzing and evaluating this particular policy, let us evaluate basic key features of this particular policy so that we will be able to do an in-depth analysis on this policy. This is basically a conventional plan. In this conventional plan, you will be paying premium for a limited period, and it is a whole life policy. It will try to give you income throughout your life thereafter. This is the kind of policy it is. Obviously, it is not a unit-linked insurance policy. No, this is not market-linked. This is completely a traditional, conventional policy. You pay premium and wait for some more time. Then you get a regular income from this policy till your lifetime. This is the structure of this policy. This is available in three bands, like 2 lakhs to less than 4 lakhs, 4 lakhs to less than 8 lakhs, 8 lakhs and above, like that. There are three bands in which this particular policy is available to you, right? And there are also multiple riders that is available. Now we have understood the overall structure of this policy. Now it's the time to understand the benefits of this policy. What is the death benefit to the nominee in case of unfortunate death of the policyholder? There are basically three valuations. Insurance company will give you three valuations. Out of that, whatever is the highest valuation, that will be settled to the nominee as death claim. The first valuation is sum assured in the policy. Number two, 11 times of annualized premium, 105% of total premiums paid. Out of these three valuations, whichever is highest, that will be settled to nominee as the death claim. Now let us move on to the maturity benefit or the overall benefits if the person survives. Right? We will take an example and see this. Let us say the policy term is 40 years, annual premium is 4 lakhs 14,500, and the premium paying term is 15 years. Sum assured is 50 lakhs. We are taking this as an example and doing it. So that means the policyholder is paying premium for 15 years around 4 lakhs. Then he is waiting for 25 years. Then on maturity, he gets regular income. How it works is what we are going to work out. All right. So when you look at it, how it works is this way. See, you are paying premium for entire 15 years. Then after that, it gives you regular income from 16th year. You get, like till 40th year, how much it works out. And this is how it works. According to Aditya Birla's Sun Life Insurance benefit illustration given by them, in a worst case scenario, they will generate a gross yield of 4%. In a best case scenario, they will generate a gross yield of 8%, which in turn will result in a worst case scenario 2.83% approximately the net yield to investors, 6.38 as the net result to investors in case the best case scenario. Right. So the return is in the range of 2.83% to 6.38%. 2.83% to 6.38% is the overall IRR, internal rate of return generated by this policy. Right? In today's situation, is this return justifiable? Will this help you beat inflation? Is this a good long-term investment? Even investing for 15 years, is it a good investment? That we have to evaluate, right? And even in best case scenario, it is giving you only 6.38%. In a worst case scenario, it is giving you 2.83% return. which is lower than your savings bank account return. Even if you could have simply ideally kept the money in your bank account, it could have given you higher rate of return. Then what is the purpose of investing in this policy? That is something like questionable. So let us evaluate this particular policy with similar products so that we'll get more clarity. Right? This policy gives you major two benefits. One is term insurance plus PPF. Sorry, means life cover plus regular income. Similar result we try to achieve by taking a term insurance policy plus making investments in PPF. Right? Let us compare that now. If we do the same thing, right, the maturity benefit seems to be much higher here. Maturity benefit is relatively higher. So that way, if you look at it, differentiating, dividing your life insurance plus balance amount in PF as an investment when you do it, this seems to be giving you much higher return, right? Without taking any risk, you are investing in government-backed investment like PPF, and it is giving you relatively higher rate of return. Here, there is no worst case scenario. Remember that. So that is the advantage of investing in PPF plus term insurance combination. In case of death of the policyholder, here you will get in this PPF and term insurance combination life cover plus whatever the balance amount available in PPF. So it is basically an additional money you will get in case of unfortunate death of the policyholder and investor in this case. Right? So term insurance and PPF seems to be giving you much better benefit than plain vanilla ABSLI vision income plan based on this comparison. Now let us compare, because it is a long-term investment, so it's better to compare it with ELSS mutual fund schemes, right, instead of PPF. So that way we are comparing ABSLI vision income with ELSS mutual fund. Remember, ELSS mutual funds are stock market based and it can go up and down. So it is not apple to apple comparison, but being a long-term money, it is better to invest that money in ELSS. So just to give you an idea how much return it can give you is what we are projecting it here. Right, life insurance plus it is not PPF contribution, life insurance plus term insurance plus ELSS contribution. It works out, the overall return works out to 7.93% and the maturity value works out to a huge figure. So that way, if you look at it, ELSS mutual fund substantially outperforms ABSLI vision income plan, right? It gives you similar benefit, but on maturity, that is on the 41st year, how much return you get. The amount is huge. You get approximately 4.5 crores as the net value at the end of the policy, which is very huge. If you are investing in PPF, it is expected to give you 3.21 crores as the maturity benefit. If you are investing in same ABSLI vision plan, it is expected to give you 65 lakhs in case of worst case scenario. In best case scenario, it is 80 lakhs. But whereas with PPF, it is 3.2 crores and with term insurance plus ELSS combination, the return works out to, the maturity value works out to 4.5 crores. So that seems to be a huge difference in term insurance plus PPF or term insurance plus ELSS mutual fund combination. Being a long-term investment, it's better to invest in term insurance plus ELSS mutual fund, but it depends upon how, risk-taking appetite, what kind of risk-taking appetite you have got. Right. So what are all some of the pros and cons of this policy that we can detail it here. Death benefit in different plans, there are different options and there are surrendering charges you have got. Bonuses are not guaranteed. Bonuses depends upon the profits, the company generates from the participating plans. And the regular income which you are getting from 16th year to 40th year, it is not inflation adjusted. It is a fixed amount, right? When you are investing in ELSS, you can choose to withdraw additional money based on inflation. That flexibility is available when you divide it into term insurance plus PPF or term insurance into term insurance plus ELSS combination. That way, you can get increased regular income. And the sum assured compared to a term insurance, the sum assured is not sufficient here. So you're paying a huge premium, but you are getting lesser life cover. So either you can't consider this as a good insurance policy, also you can't consider this as a good investment plan. The returns are very low and will not help you beat inflation. If you are completely a risk avoiding investor who wants to be very conservative, then go for a combination of term insurance plus PPF. If you are someone who is willing to take risk, who has got the ability to take risk, you want to have kind of an aggressive investment, then go for a combination of term insurance plus ELSS. Or alternatively, if you want to be a moderate investor, then term insurance plus ELSS plus PPF. In such a combination, you can invest. You can do asset allocation this way. We have done a detailed analysis of this particular policy, and we have posted that research analysis in our blog post. The link to that blog post is available in the description of this video. Please click that link and read the detailed research report on this particular policy. You will get much more better detail there.
If you have any questions related to this or any other investment options or related to your financial goals, feel free to book a free appointment with our financial planner. The link to the free booking is given in the description below this video. Also, will you be interested to attend insightful investment webinars? Then feel free to register for our upcoming insightful enlightening investment webinar, and it is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give a thumbs up. Also share it in your social circle. If you are not subscribed to our YouTube channel so far, please subscribe now. Bye.